If you look at the way the markets were reacting, they were moving in lockstep. Stocks, bonds, gold, Bitcoin. Every market has been trading the opposite of oil. You can pretty much look at the price of oil and know what everything else was doing. If oil was up, everything else was down. If oil was down, everything else was up. And the rationale behind this relationship is that oil prices going up are a reflection of the escalation of the war and the idea that the war will continue longer and have a bigger impact on the price of oil and therefore on the Fed and Fed policy, in that as long as oil prices are elevated and rising, the Fed is on hold. The Fed can't cut rates, even if it wants to cut rates, even if the economic data confirms that maybe it should cut rates the way it looks at the data. It won't, because of the fear of somehow higher oil prices spilling over into higher inflation and therefore keeping the Fed on hold because of the tension between the two mandates. But I don't believe that this relationship should hold with respect to gold. Also, you can throw the dollar in there too. The dollar goes up with oil. And so foreign currencies rise when oil goes down, and they go down when oil goes up. And again, this is the idea that a tighter Fed is going to be bullish for the dollar. But what traders are overlooking is the bigger picture. It doesn't matter what the Fed does with respect to rate cuts. If the Fed stays on hold, or even if it notches rates up slightly, 25 basis points, 50 basis points, that is not bearish for gold. That is not bullish for the dollar, because nominal rates are irrelevant. It's real rates that count. Inflation is surging by any measure, and it's not the higher oil prices that are going to cause the inflation. It's going to be the monetary policy that ultimately results from those higher oil prices, because that's going to help weaken the economy. And soon investors are going to start pricing in the next round of economic stimulus, which I believe will be enacted well before the midterm elections in November. There's going to be a lot of pressure for economic stimulus going into the economy. And the higher the oil price is and the longer it stays up, the more pressure there's going to be. But the war is increasing budget deficits, and all that's going to put downward pressure on treasuries. That's going to weaken the economy. Higher interest rates, higher mortgage rates. And as the economy weakens and budget deficits widen and more money is printed, the inflation rate goes up. But immediately, these higher fuel prices are going to start feeding into the CPI, and especially to food. And food prices are also rising. I don't know if you've seen the price of coffee lately. That's surging. But all commodity prices are going to be impacted by what's happening with fertilizer prices. And so as inflation rises, that means real rates are falling. Real interest rates in 2026 are going to be far lower than anybody had forecast. Even if we had had 2 or 3 rate cuts by the Fed during the year, even without those cuts, based on a massive increase in even the way the government measures inflation, it's going to be obvious that real interest rates in 2026 are going to be much lower than anyone had forecast. And therefore, the price of gold should be considerably higher and the dollar lower. We got down to around 4,100 on Monday morning of that week before we reversed. And then we rose up, I think yesterday, we got as high as almost 4,800. So that's about a 17% rise. Gold ended up closing on the weekend 46.76 because we did pull back yesterday in response to the president's disappointing speech, which I will get into next. But we still had a 5.8% rise in the price of gold on the week. So anybody who followed my advice last weekend and went to Schiff Gold and bought some gold and silver had a pretty good week. Silver up 7.2% on the week, closing the week back above 70 at $72.90. But an even better performance out of the gold and silver mining stocks. This is despite yesterday's drop and the fact that the week was only 3 trading days long, other than yesterday's drop. But so in the 4 days of the week, the GDX was up 14.5%, and the GDXJ up 14.8%. That's after yesterday's decline. So the first 3 days of the week saw huge gains, mostly in Tuesday and Wednesday. Most of the gain were those 2 days back to back. That dwarfed the gain in the stock market. The Dow was only up about 1.65% on the week. S&P up about 2.4%, and the NASDAQ up about 3.2%. But all these indexes still down on the year, whereas gold is still having a good year, despite having its worst March since 1980. Within that, it's still having a great year. But I think gold potentially could have the best April. Not 1980. Gold had its worst month since 2008. In March. But I think gold could have its best month since 1980. That's when gold had some huge gains. And of course, that was the year that gold peaked out at 850. But we had some huge monthly gains. But I think the stage has been set for a huge monthly gain this April, given the magnitude of the drop that should not have taken place in the month of March. By the way, Russell 2000 also had a pop on the week, about 2%. But again, all these gains are dwarfed by the gain in gold and silver. Now, yields on U.S. Treasuries did fall slightly on the week, but not much. The yield on a 10-year Treasury closed at about 4.31 something, and on a 30-year, 4.89. So, the highest the yields really got was about 4.4 on the 10-year and 4.99. I don't think I ever saw us touch 5%. So we're not far from the absolute highs on yields. Dollar index also had a positive week, but just barely. I think it eked out about a 25 basis point gain to end the week just north of 100. In gold and silver stocks last week, almost 15%. We're still way, way below the peak from the end of February, when stocks were still cheap. Even though they had a huge gain, they were still cheap. Yes, gold prices have pulled back, but by the end of April, I think we can be substantially above 5,000 again. Yes, oil prices are higher, so that is on balance a negative for the miners, but not enough to offset the massive positive that never even got priced in from the big increase in gold and silver prices. When everybody is amazed at the brilliance of our forces, Trump really means the brilliance of Trump, that he is this brilliant commander-in-chief who has organized the greatest victory in the history of war, and how rapid, because he talked about how long World War I went and how long World War II went. And of course, during those wars, we were fighting, had much bigger enemies than just Iran. But he compared the duration of those wars, also mentioned Iraq, mentioned Vietnam and how long that thing went on. But a lot of it is, because of him, because he is the president. And so a lot of it is he's just bragging about himself and his accomplishments. And he sees that. He sees himself in our military, which, of course, he also claims credit for building up. But he also spoke again about the economy. And with the same lies that he continues to repeat, he said that he inherited a dead economy, the worst economy, the weakest economy in history, and that he built it back to the strongest economy in the history of the world. He said we have the hottest economy. This was before the war. We had the hottest economy by far. It wasn't even close. By far, we had the hottest economy with no inflation, zero inflation, and we had the highest stock market in history, and we had 18 trillion of foreign investment coming into our country, which again is a number that he just pulled out of thin air. But the fact that we had the highest stock market in history is irrelevant, because Biden had the highest stock market in history too. In fact, at this point in his presidency, even before the war, forget about the fact that most of the gains have been given up since the war, but even before the war, if you measure the gains in the stock market under Trump, they were lower than they were under Biden. So why are you bragging about the stock market when it's no big deal? Yes, the stock market, the Dow hit 50,000. When Trump took office, it was 44,000. It is no big deal. And the stock market is only really going up because the anticipation of the Fed cutting interest rates. That's why it's going up. But he's repeating all this nonsense about how great this economy was. And I think that's going to be how they're going to frame this for the midterm elections. Because even though the economy, by any way you want to measure it, could likely be in recession, in stagflation, Trump is going to try to misdirect voters into believing that we had this great economy. Because what Trump said, too, is as soon as this war is over, and who knows if we're ever going to declare it over. But as soon as it's over, he said the economy is going to come roaring back, that it's going to be stronger than ever, that even though we had the greatest economy in the history of the world before the